Egypt's central bank is holding steady and sending a clear signal about where it expects inflation to go. The Central Bank of Egypt kept its benchmark interest rates unchanged at its latest policy meeting. Policymakers say inflation is slowing, and they want to see that trend continue before making any further moves. The bank has now set a public target: bring inflation down to single digits by 2027. That goal matters because Egypt has been dealing with painful price pressures for several years. Inflation surged after a series of currency devaluations, cuts to government subsidies, and spikes in global commodity prices, particularly food and energy. To fight back, the central bank raised borrowing costs sharply over that period. Those rate hikes were aggressive by design. The idea was to cool demand and stabilize prices, even at the cost of higher borrowing costs for businesses and households. Holding rates steady now is a sign that policymakers believe the strategy is working. Not finished, but working. Getting inflation into single-digit territory would be a meaningful shift for Egyptian consumers. Double-digit inflation erodes purchasing power fast. It makes everyday goods more expensive and squeezes household budgets, especially when food and energy take up a large share of spending, as they do in Egypt. Reaching that 2027 target won't be automatic. It would require the Egyptian pound to stay relatively stable, government finances to remain under control, and global commodity markets to cooperate. Any renewed pressure on oil or grain prices could make the path harder. For investors in emerging markets, Egypt's story is also tied closely to its relationship with the International Monetary Fund. The country has been working through an IMF-backed reform program that has required difficult trade-offs: cutting energy subsidies, allowing more exchange rate flexibility, and tightening fiscal policy. Progress on inflation is one of the clearest signs of whether those reforms are actually taking hold. The hold decision also preserves the central bank's options. If inflation falls faster than expected, rate cuts could come earlier than the 2027 horizon suggests. If global conditions turn, or if the pound faces renewed pressure, policymakers still have room to tighten further. Right now, they appear to be choosing patience over action. That patience is a reasonable stance when the trend is moving in the right direction, but the destination hasn't been reached yet. The practical takeaway for anyone following Egypt or broader emerging markets: watch the monthly inflation prints closely. Each data release will tell you whether the central bank's single-digit target is on track or whether the timeline is starting to slip. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.